Hi class, welcome to week 2. Yay! Is everyone excited? Well, this week, as we know, the things that are due is going to be homework 2. We need to participate in discussion question 2, which you want to post at least one time by Thursday and 2 more times by Saturday. Also this week, we're going to have a quiz that's due. It's 20 questions, kind of call it multiple choice and true false questions. You guys take your time. It's not timed. So good luck to everyone. So this week we're going over chapter 4, the revenue cycle. What are the objectives? The objectives are to understand the fundamental tasks performed in the revenue cycle, regardless of the technology in place. So we don't care what kind of system. We want to understand the revenue cycle. We want to identify functional departments in the revenue cycle and the flow of revenue transactions through the organization. We want to specify documents, journals, and accounts needed for audit trails, records, decision making, and financial reporting. We're going to understand the risk associated with the revenue cycle and recognize the controls that reduce these risks. Obviously, it has to do with revenue. There's going to be cash receipts. So you know that probably is a higher area for fraud. The last thing, we're going to be aware of operational and control implications of technology used to automate and re-engineer the revenue cycle. So this is a data flow diagram of the sales order processing system. So you can kind of really look and see how all these different systems and places flow together. So the conceptual system, so you have sales order. So what do you get first? You get a receive order. With the receive order, customers basically, so you begin with a receipt of a customer order, which is then transcribed into a formal sales order, which is placed in a customer order file for future reference. You're going to check credit. You want to make sure that whoever you're giving stuff to, selling things on credit, has the ability to actually pay for it. You're gonna pick your goods. So in your warehouse, the goods that you're sending to your customer, those need to be taken out. So the stock release or picking ticket provides authorization to warehouse personnel to release goods which are sent to shipping along with the verified stock release. Warehouse employees adjust stock records to reflect inventory reduction and prepares back order records if insufficient goods. So this is the sales order, and you can see it's a credit sale, so that means that we're not going to get cash. So these are all the things you can read that's on there. Who it's sold to, the purchase order number, how much, what's the product number, the description, etc. So sales order procedures. So we gotta ship the goods. Shipping department uses a packing slip and a shipping notice to reconcile goods received from the warehouse. The goods are packaged. A bill of lading is prepared. Goods are given to a carrier. Shipment is recorded in a shipping log. So you can see how all these different departments and even outside carriers, how it all fits together. The bill to the customer, done after shipment by sending a completed sales invoice. Billing, record keeping includes record the sale in the sales journal. The sales journal is a special journal used for recording completed sales transactions. Entries are summarized in sales journal voucher used to update the GL control account. So this is an example of the bill of lading. So it says the shipper number, the carrier number, who's consigned to, all those kind of information, the weight, how much it's charged, all of that. So this is something that we're more familiar with, a journal voucher. So when you make a sale, what's the normal entry? Accounts receivable, we're gonna debit and we're gonna credit sales. And you see right there, it's posted by one person and approved by a different. I don't know, it's something you notice, but that's something of like segregation of duties, which is an internal control, because we don't want the person who's posting it to actually be the one that's approving it as well. We have to update the inventory records. The inventory control function updates the inventory subsidiary ledgers from the stock release document. So you want to see that, that inventory is gone and that's becoming cost of goods sold. We want to update the accounts receivable record. So customers records an accounts receivable subsidiary ledger from the sales order ledger copy. Because we did this, it's a credit sale, so obviously we have a receivable. We want this to post to the general ledger. The general ledger function uses journal vouchers to update control accounts. This is an example of inventory, a perpetual inventory record. This is an example of an accounts receivable subsidiary ledger. This is a data flow diagram of sales return procedures. So obviously all of us have gone to a store and bought something, came home, either something was damaged or it wasn't what we wanted. So these are just the procedures that company have to go through when you got a sales return because someone didn't want it. So these are the procedures you have to do. You have to prepare the return slip. Customer records in the accounts receivable subsidiary ledger updated from the sales order. So if someone returned it, we're obviously no longer, that receivable balance is going to go down because we're not going to get paid for it. You have to prepare a credit memo. Someone has to approve the credit memo. And you have to update the sales journal entry and update the inventory and AR records. So this is an example of a credit memo. As we said, these are credit memos happen when someone returns the goods because they don't want it for some reason. Many times it's because the goods could be damaged. So now this is a data flow diagram of now you're actually receiving the cash. So take a good look at this. So this is the procedure for the cash receipts. You gotta open mail, prepare the remittance list. Remittance advice is a turnaround document. You gotta record and deposit the checks after reconciling. Employee records check in the cash receipts journal and prepares a bank deposit slip. And we're gonna update the accounts receivable because obviously once we receive cash, we should be reducing that accounts receivable balance because we've received it, and update the general ledger. We're going to reconcile cash receipts and deposits. Employee not involved in cash receipts process reconciles receipts by comparing a copy of the pre-list, the deposit slips, and the related journal vouchers. So why do we want an employee that's not involved in the cash receipts process? Because we want checks and balances, internal control, segregation of duties. This is another thing that we have to be aware of, especially when it comes to cash. So this is a copy of the remittance advice. Just take a good look at this. This is the cash receipts journal. So they're physical accounting information systems combine technology and human activities. Smaller businesses tend to rely less on technology, where large companies tend to employ advanced technology. Nature of mixed employee employed in a system impacts the internal controls needed to control the system. Computers and basic technology revenue systems are independent. Information between departments is commuted via hard copy documents. Maintaining physical files of source documents is critical to the audit trail. So this is basic technology sales order processing system. So you see the billing, inventory control, accounts receivable, general ledger. These are the systems now. So it begins with a customer placing an order. The sales department captures the detail. The credit department verifies the credit and improves the order. So everything is like step by step, different departments. If you can, hopefully it's a larger environment where you can do good segregation of duties. Obviously, when a company is smaller, it's very hard to do segregation of duties, so the internal controls won't be as great. The warehouse sends inventory to shipping and records inventory reduction. The shipping reconciles order, prepares bill of lading, ships items, record transactions, and sends stock release to billing. Billing department bills customer and updates sales journal. AR and inventory clerks update the subsidiary ledgers. The journal, vouchers, and summaries are periodically sent to the GL for reconciliation and posting. So this is the physical. Checks and remittance advices received in the mailroom. The clerk reconciles. So you see the physical is not really IT related. The clerk reconciles the item, endorses the check, prepares a remittance list, and sends checks in a list of copy cash receipts department. Remittance advices and lists copy sent to AR. Their cash receipts clerk records checks in cash receipts journal, prepares deposit slips, and sends checks to the bank. Periodically, a journal is sent to the GL department. AR updates customer balances and sends summary to GL. The GL clerk reconciles amounts and posts to control accounts. Controller clerk performs periodic bank reconciliations. So you can see an integrated sales order system. So, advanced technology. Advanced technologies allow integration of accounting with other business systems through a common information system. Objective is to improve the performance and reduce costs. So, it's got to be a lot easier than working with different people in different departments with manual inputs. So it can significantly alter and simplify the revenue cycle. Remittance advices and list copy sent to accounts receivable. With an integrated sales order processing system, many functions are performed automatically to the center computer system. These labor-intensive activities increase operating costs and contribute to human error. Technology reduces costs and errors, increasing efficiency. So you can see this integrated cash receipt. Here is a summary of the revenue cycle, the risk, and the control. So, sales to uncreditworthy customers, we know that's a big risk. So what's the control? There's a credit check. There's segregation of duties. So we're separating credit and sales functions. The shipping, the wrong items, quantities, there's independent verification. Shipping department reconciles shipping with order. Inaccurate recording, keeping, you can see that misappropriation of assets, so stealing, unauthorized access to data. These can be the IT control, so an automated credit check, scanner technology, automated inventory order, input data edits, automated posting to accounts, file backup, multi-level of security to achieve segregation of duty, and password control, multi-level security to prevent unauthorized access.